And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Sunday, May 23rd, 2021. I am going to start by saying I have put the B wave, I'm marking that as complete after Friday's fairly strong down day. It kind of convinced me that upside's over for right now, and likely we have started the first stage of the C wave down. Now, having said that, please understand that the C wave is going to be a 5-wave structure, and it's going to look something like this. And it's now starting from a much lower level. So we're again continuing to look for the market to drop at least 12,750 down to that 12,700 area, as we have discussed before. Right now, the 3A2, which is a very common area for fourth wave or a corrective wave, and particularly in this position, the fourth wave, to reach. It usually will pull in at about 38% decline or 38% pullback as related to the third wave, so to correct that third wave. But more common would be a continued drop, and that could reach the 50% level, which would be 12,343, so we can call it 12,350. So we've got a big range down there. And indeed, if the market does not just turn around and take back everything that it did on Friday in terms of coming down, then I'm going to expect for the market to continue to just again turn lower. Right now, they are putting in a little bit of a rally because in the Globex session that just started about an hour and a half ago, the Dow is now up 61, so it's not any great shakes, but the NASDAQ does feel like it's got to follow suit. They did gap lower, but now they're just attempting to walk in and fill that gap. In fact, I'll just pull this down to the 15-minute, and you can see that it gapped lower on that opening, and now they're just moving it up. And if they fill the gap, they'll get it back up towards that 15-minute 200 at 13,400. More stranger things to have, but I wouldn't totally be expecting it. And I think that once the Asia markets open, they'll probably turn it lower again in response to what we did on Friday. Now let's just go back to my hourly, and I'm going to put a Fibonacci extensions on there so we can get an idea of what we should be expecting coming off. So that Fibonacci extension, since this C wave is going to be in relation to this A wave, and so we want to measure that out, and that extension will run from the high at 4,064, and we're going to take it down to this low. Come on. And then up to this high, which was 70 right there. Okay, so we can start to see that our even very first level of support is going to be at 13,300 to 13,295-ish, I'm going to call it. Then we have the larger Fibonacci retracement support at 13,250. We have, then it starts to break. And that fits because you can see there was that very strong rally that we had last Thursday that basically lasted the entire session. And that, once we clear this, starts to open the path for another 120-point drop. And that would take us down to 13,130. And then the first level that could possibly contain it is that wave C will be 0.618, the length of wave A. And that's going to bring us down to 12,860. 12,860. And that could complete it. And I'll tell you why, because basically wave C just needs to put in a new low below wave A. So that Fibonacci number does kind of come in. Not the most common though. It would be number 2 on the list of what we would be looking for. But if the structure insists and this is all clean, then it could stop there. More likely, we've got that wave C will be equal in length to wave A, and that's going to bring us all the way down here to 12,420. So that brings us way down into these lower depths, because once, if we clear that, the next most common area, and we kind of got it all bunched up here, we have 2 Fibonacci, 3 Fibonacci levels in a zone. So that zone could be 12,750 down to 12,665. So again, it's about a 90-point zone and anywhere in it. Now, let's put this in order of what we can expect. Most common down here, 12,420. Second most common would be 618, that's 12,860. And then we have the cluster, which kind of puts this, it's probably number 2, but it could be actually number 1, because we're getting a cluster of Fibonacci support. And that always will bring strength to that zone. And so I would probably put this 1, 2, 3. So first most likely, second most likely, third most likely. And quite frankly, depending on the shape of the structure, that's what we always go by. We need to produce 5 waves down. So 1 down, 2 up, 3 down, 4 up, and then 5 down. And once that's complete, and if it ends up being here, well, then we're going to raise that probability scale a little bit. But if we need additional downside, depending on how much we think we need, then we're going to be raising this probability level, and then this probability level. They all come into play as we let this structure unfold. Now, let's discuss quickly, what about upside possibilities? Yes, the market can always turn from here. If that Dow really picks up and starts to rally, it's not going to allow the NASDAQ, although it could, but more than likely, they're not just going to sink the NASDAQ while the Dow rises. But we have now seen it also within the sequence of this larger correction. That right here, it's an intermediate 4th wave correction. In the S&P, it's an intermediate 4th wave correction. And on the Dow, I don't know, because I've not done the work. But I've got 2 out of the 3 majors that are showing that we should have an intermediate 4th wave level decline. So the NASDAQ going down will help bring the S&P down with it. But the Dow, the strength in the Dow could keep the S&P up a little bit. So we've got some things at play. If all markets are going to go in sync with one another, and that we're seeing more broad-based selling across the spectrum of the markets, well, then I would think that we should start to get some acceleration. Now, don't forget, once we do complete an initial 5 waves down, again, I'm going to go back over here. There we got 1, 2, 3, 4, 1, 2, 3, 4, 5. We've already gotten this 5 down. So this would be a nice 5-wave structure. You're going to run fibs from there to there, if this low is not taken out. And now you're going to have your fibs on where this thing could come back up to in a wave 2. So if we're going to say that this is 1 of C, then we got 2 of C to do. So don't know yet, but these could all be possibilities. So we're just going to lay them out. We're going to have resistance, 13,400. That's where the 200-day moving average is. And then we have the 20 above that at 409, 410. And then we have the 50 at 443. Now, the 50 becomes the big candidate here, because that puts us into the 4th of 1 lesser degree, and that's right there. So that's going to be a nice area for a wave 2 to kind of finish off. Could it go higher? Absolutely. We would run fibs only when the certainty that this is a completed pattern of that level, which would then help complete this first level down. But right now, I don't know. And so we're going to have to continue to leave it open. It just switches and starts to come down even more. We still will get that bounce, but we'll have to determine maybe it's from a lower level. So if I come in tomorrow morning and I see that the market's up here, then I can draw my fibs from there to there. And it's retracements, not extensions. It's going to be retracements that'll show you where this wave 2 of C should top out, and then lean over and give up to a third wave. So wave 3 of C should be strong, should be accelerating. I mean, this was only one, and we saw some nice acceleration coming off, that it should strengthen that acceleration and start breaking down these other levels as we start getting down towards this level, 13,130. And again, we're just really revisiting a lot of areas we've already been. It's now just in a different decline or a different wave structure down. And so we're going to count it the way it should be counted and get it down to the bottom. And that's going to set the stage once it's complete, folks. This is the part that I want to make sure that we all really wrap ourselves around. This is just a corrective decline. It's only of an intermediate level. So if we go bigger than that, which once we finish the intermediate fourth wave, we have an intermediate fifth wave advance. That advance would be fully expected to go to new highs about 14,064. And then on up towards those much larger numbers that we have discussed in the past, we will discuss again once intermediate wave 4 is complete. We'll be looking at where we think this intermediate 5 should go. That's the wave that's going to be completing a much larger sequence. That's going to complete then a primary fifth. It's then going to complete a cycle level third wave. So then we're going to be getting to a cycle wave 4 decline. That's going to be much larger, much longer in terms of time. And so we'll be really being able to measure that out. And we'll be in it for quite a length of time. So for tomorrow, I would anticipate that we're going to have continued decline. I'm not looking for too much because we're just finishing this first wave, and then it's going to set the stage for an ABC rally back up again. Once that's in place, then I'm going to be looking for a stronger decline. So if this all finishes up by tomorrow, maybe Tuesday, then towards midweek, I'd be looking for some stronger moves to the downside. Again, continue to trade what's in front of you. That is what is most important. We're just giving analysis, and I'm just giving probabilities and also points where markets can move to. More importantly, though, you're going to use that same type of strategy during the day of allowing your moving averages to help you pick your entry and your exit points, and don't get married to any side. You know, the markets are going to ebb and they're going to flow, and they're going to, sometimes it's going to be greater than more buyers than I expect coming in. That doesn't mean that I stop trading. I'm going to have to continue to trade because there are opportunities to make money. And by the way, that's my primary objective. And I am not hooked on being always correct and having my Elliott wave, because the market continues to tell me what it wants to do. Then I can it's not that I'm building a count around it, but the count will then become more obvious as we go out into these things. Like here, we were looking for the ABC. When it started to look like it could be complete, we gave additional analysis that continued to show that we should go up one more time. But once that was done and the market declined substantially off of it and quickly, it gave more support and credence to that being the completion point for that B wave that we were talking and that we were in, setting the stage for the C wave decline. It all fits. That's where I'm going to leave it, folks. And the next update will be Monday, May the 24th.